Thank you very much, Salifu. Thank you very much. Good morning, good afternoon, and evening, everyone. We know some of our colleagues, participants, and panelists, dialing in from different time zones. So today is going to be an interesting conversation. It is business partnering, as Salifu rightly said. The conversation on business partnering as far as finance is concerned moved from being a debate where there has been questions whether finance can do more to help businesses. It moved then to expectation where increasingly businesses really want finance and require a certain level of support. And then now, where what we are seeing is a fundamental requirement for any successful business or finance funds and wherever we are. So as rightly introduced today, we'll be discussing how the finance function and the finance professional as a whole can become our strategic and how we can be our strategic business partners. How do we become trusted advisors to our respective CEOs and become key member in the institution's decision making? With me today are seasoned and accomplished professionals with wide-ranging experience and expertise from core accounting to global finance, both in the private and public institutions, including central government, and as well with strong knowledge in the banking and finance sector, logistics, and including some private ventures. So Fatoumatta is a fellow of ACCA with a very strong experience in financial services. And I would acknowledge this is not the first time Fatoumatta agreed to join us to at least share experience and lead the team through the discussions here. So he's currently based in the USA as a financial advisor with Merrill Lynch in the US. So he's also the founder and CEO of Dibba and also Afro Center Fashion. I think she's an example of really how phenomenal our ladies today are. Fatoumatta previously worked in Standard Chartered Gambia, and then she was also based in Nigeria, working from the West African hub of Standard Chartered in Nigeria, Lagos. Thank you, Fatoumatta, for joining us. The other participant, panelist today is Mr. Alieu Jobe. Mr. Alieu Jobe, most of us know him. He's been a mentor, a role model, and a supporter to most of us. He's got 25 years plus experience in the finance industry, from accounting to tax, both in the private and public sector. Mr. Jobe was an accountant general and director of National Treasury for the government of the Gambia, and currently he is the director of finance for GNPC, the National Petroleum Company. Thank you very much for joining us, and thank you for the support and mentorship over the years, Mr. Jobe.
All right, thank you very much, Mr. Swa.
And then finally, Mr. Ebrima Sawaneh. I would say Sawaneh took over today from Mr. Ture, who wasn't able to join us due to some unforeseen circumstances, but he would be back with us in due course. Mr. Sawaneh, most of us know, he is one of the most active and vibrant individual in the finance industry, both in the Gambia and across outside the Gambia. Sawaneh is a fellow of ACCA. He is currently the Group CA4 for Arise Ports and Logistics based in Libreville, Gabon in Central Africa. Before this, he was based as the Vice President Finance for Act Corporation, which is more, which is looking at infrastructure and investment banking across the continent. We all know he is passionate with guiding, especially the young people across. Sawaneh also authored a book in helping young finance professionals or accountants who are pursuing respective professional courses. And he also wrote a number of articles to guide the upcoming professionals in the sector. He previously worked in the Gambia with Ecobank and Gandhi Trust Bank, respectively. So thank you very much, panelists, my dear panelists, for joining us today. But we all know, as indicated, increasingly, we are in a complex business environment where organizations are demanding greater value from all of us, from all units, but including finance, where finance is no longer seen as an accounting function, not only reporting to respective regulators and only not focusing on goal, but where we are expecting to implement some level of strategic guidance to the end. So finance is doing this through business partnering, which helps other part of the decision making. This also helps foster a culture of governance, accountability, scrutiny, and where strategic and tactical decisions alike are found on data and projected figures. So I would be engaging in discussions with these three experts in finance and who have strong experience in this subject, and they would be answering some of our questions to everyone and guiding their experience with real life examples that we can relate to. But then I would start with our lady in the house, Fatoumatta, who, like I said, it's not her first time to join here, not the first time to be the panelist. And we thank you, Fatoumatta, for accepting to be with us as well today. So Fatoumatta, finance, business partners, accountants, we all know who work very closely with businesses to help make key decisions as initially indicated. From your own perspective, what does business partnering itself entails?
Thank you so much, and I appreciate being here. The finance business partnership involves accountants, financial individuals who work closely with particular business units, creating a real and active partnership with both the operations and the management, in my view. Their role is to provide real-time support and analysis, to be a trusted advisor, and to add value that will assist with decision-making.
Thank you. Fatoumatta is spot on, and this is very important. So you would agree with me, as he indicated, it is no more being a back office function, and I think he indicated something very important. We as accountants or any accounting professional, you expect to be forward-looking and guide, provide necessary support where leadership can make critical decisions. Thank you, Fatoumatta. If I would go to Sawaneh, Ebrima Sawaneh, in terms of the effectiveness of a business partner, see, to put it in perspective, I think business partners will also often be embedded within business units to create certain level of real-time support and analysis. But then in your own perspective, if you can pull some examples, how can finance or accountants be effective as a business partner?
Thank you very much, Mr. Sua, and good afternoon or good morning to other panelists and the participants or audience, where maybe you are calling from. This is a very important question, and it should be the key or the beginning, because you cannot be a business partner if you're not doing it in the right way. For accountants to be an effective business partner, one of the key things is involvement and participation. For you to get involved and participate, you have to understand what you are supposed to be involved in. Let's take an example. You are working in a manufacturing company, you want to be an effective business partner. You need to understand the value chain of that manufacturing company. You need to understand how they manufacture their goods operationally, how they source their raw materials, and how they get those finished outputs to the consumers. So a finance person has to get involved. We cannot do business partnering in our office, on our chairs. We need to get involved and get close to the people we call partners. It can be a CEO. If you are a business partner from a CFO's point of view, you need to have that constant touch with that CFO. This is just the beginning of the point, Musa. The critical thing is we have to closely connect, dialogue, communicate, and understand that business for you to be an effective business partner.
Would it only understanding Excel? Like every accountant, definitely Excel is part of our key skill, but it is understanding the business itself and to be able to give the necessary support as it may require. Thank you, Sawaneh. Now I will go to our senior man in the room. I think Mr. Jobe, like we've indicated, has experience and at a very, very senior level. We want him to be here today so that he can continue help guiding the young professionals, all of us today, as we progress. So Mr. Jobe, a gentleman called Neil Johnson wrote that an ability to understand your audience, to analyze data, and to deliver information in a clear and user-friendly manner is critical for professionals. So today, what do you think are the key skills of finance professionals, the key skills that accountants need to be an effective strategic business partner?
Thank you, Mr. Swa. My voice is not very clear today because I had some little cold with me. So what Mr. Sawaneh has already shared, one of the key things is understanding the business environment and the particular corporation or industry you're working in. That is the general understanding that you need first. And some of the key skills that are needed actually is to have some superior analytical skills, which are very, very important. It's one thing to get the reports right, get the figures, but those figures are a means to an end. You will need to be able to analyze them, and it guides you in decision making. And for that matter, it helps for the finance people to be strategic business partners and effective one for that matter, which is very important. Also, the other skills that are needed would be skills in terms of being able to be change agents, which is very, very relevant. We need to be able to get those skills. We must also have skills in terms of, cost containments, to advise businesses in terms of how to minimize costs, which definitely leads to improving the bottom line. And this cost containment is one of the most complicated things because we have to understand in most cases, all the business units are just focusing on one thing, achieving their objective. But those objectives must be achieved in tandem with the minimal cost that is needed to do the job. And these are critical things that CFOs are facing. You'll always realize that people will say, okay, CFOs are not ready to spend the money here and there. But it's all about the cost management, and we want efficiency in terms of cost. Cost efficiency is very relevant, and this is very key. As CFOs as well, or as finance people, some of the other skills that we need to also have is at least to understand the risk of the business, which is very, very paramount. And without understanding the risk of the business and trying to manage the risk, it could probably lead to, it will erode the profitability and the performance of the corporation. This is really vital, and it's another thing that we need to also look at. It is not about only preparing the report, as we've already indicated. You can prepare the report, put it on the table, but that is just a means to an end, as we say in economics. So but the ultimate objective is to be able to utilize them to guide the executive, to guide management, whether it's the public sector or private sector, to make the right decisions. And that is going to translate into value adding, as indicated as one of the business, partnering approach we've talked about.
Thank you very much, Mr. Jobe. That's point on. I think this is why we really need you here. The skills that he mentioned must have skills, and these are the skills that really would help directly impact businesses positively. Like Mr. Jobe indicated, one of the key skills that we all should ensure we have as accountants or finance professionals is to be able to explain the numbers in the non-financial language. I mean, non-accounting language. I think this is a must. Not all business heads have a understand the level that we have. I think it is very, very important to understand and be able to, simplify these numbers. And one other point that Mr. Jobe mentioned is cost. So today, businesses, most of the people are, business heads are more focused on driving revenue. And this is where their key skills are sales. So we should be there and to ensure that we monitor how they really get through those sales, how they bring the revenues at a minimal cost. So the cost to serve, the cost to deliver results must also be important, because the business or the revenues are as good as the level of conversion. When you make a lot of revenue and it wipes out with, the cost wipes it out, it definitely makes no use to the bottom line. The return to our shareholders in terms of value will definitely be minimal. Thank you once again, Mr. Jobe. So this particular one will start with Fatoumatta, but it would be for all the panelists. So most of what we learn in schools as accountants relate to numbers. So how do we migrate from, how do we migrate into strategic matters from numbers only? I mean, being an accountant, most of the things you see is numbers. But I think there may be some tips around the steps that one can follow to ensure that you slowly move into the strategic matters. Fatoumatta, if I may start with you.
Thank you so much. Strategic finance is a financial planning function that brings together key elements of strategy and finance, right? As well as marketing and corporate development. It's not something new, it's always been there. It's not just numbers. The typical task associated with this function is often performed by individuals within the organization, getting problems, often the lack of proper identity, independence, and just putting everything together. So for me, the key thing to follow is just be yourself. Number one, what I did was I went to different departments in my organization to learn what exactly they do. Because with strategic financing, if you do not understand the business, you wouldn't be able to bring those key elements of the strategy and finance or marketing or corporate development. Go to each and every one of these departments. They're all individual and they're all independent, but once you know key aspects of their operations, you will be able to communicate to them in the language that you believe they would be able to hear. The other thing is you need to be able to understand your numbers. Oftentimes, the reason why people don't understand us is because we don't understand our numbers ourselves. So we just bring the numbers the way they are and then present it. We are confused and we confuse them too. So understand your numbers, analyze them properly, be able to present them in tables, graphs, charts, colors. That's what people truly understand. Let people see how this number actually affects their individual departments. And obviously, be able to communicate well, openly engage with others, be able to use stories, examples, and say, proper examples and stories to be able to communicate whatever you want to communicate, especially the numbers.
Thank you. I think very relevant. What Fatoumatta said, it's important. So finance, we have to have an idea of what other departments do, because it really impacts the bank, and overall we control the financials. And then what CEO is to understand and be able to present. I think presentation is very important, is a key skill. So we should be able to present in a way that it makes it easy, and businesses can easily relate to our numbers as well. Thanks, Fatoumatta. So if I may go to Sawaneh with the same question. Sawaneh, what do you think you should be able to add on what Fatoumatta said?
Okay, thank you very much once again, Musa. And Fatima did mention key points there, which relates to, again, connecting. And that's very relevant for business partnering. Connecting with other departments is very important. I remember in my career, I used to connect with the lawyers, trying to understand the laws of the country then in Gambia. I've had opportunities to go and sit with the bankers in the corporate bank or consumer banking, trying to understand how they do their work. The same thing for risk management, trying to understand how they do their work. That's very, very important. When I looked at how accountants can move from viewing numbers only to also do strategic issues or strategic works, for me, it starts with learning. You've mentioned that, okay, we've learned a lot about numbers in school, financial statement preparations, budgeting, forecasting, and the rest. But if you want to learn more about strategy, you have to first of all read. You have to understand the value chain of your business. What are the global areas that impact your business? Many accountants knows that or heard that when the interest rate increase, it affects the economy. But very few truly looked at how it impacts their business. This is just one example. You may not be an economics as an accountant, but you have to know the government decisions, for instance, affects my business. If government increase interest rate, if I give an example, in a country, what it does, it tends to bring more investments into that country, because people outside would say, okay, if I take my money into this country, I will be able to earn more interest on my investment. And what happens there, if interest rates goes up in a country, it also tends to make exports more expensive. So if you are an exporter, if interest rates goes up, normally your exchange rate also tend to go up, because more people are trying to buy your local exchange, your local currency. So that will make exchange rates start going up. And when they go up, as an exporter, those who are buying your stocks from outside the country will see it as something expensive. These are correlations we should learn. In that case, when we see numbers are not coming, sales are not coming, it's not just we're going to tell the sales department, you have not achieved your target. We looked at sales have gone down, but from the data we had, from the analytical skills which Alieu spoke about earlier, we realized that anytime interest rate goes up by 5%, my sales goes down by 2% or 1%. And you are able to bring out from the data analysis. So if you want to move into strategic areas for finance as a business partner, you have to understand a whole lot of areas that impact your business value chain. You have to know how to communicate. Communication is very, very critical. Like Fatima spoke about earlier, many accountants, we were never taught how to present at a meeting. I mean, Musa, you and I, we've seen those things before at a business review session where somebody's on the AC sweating because he's presenting. This impact the way we give information to our stakeholders. It is better to say 1 or 5 out of 100 for somebody than for you to say even 10%. Sometimes you'll be thinking that 10% is easy, but if you tell someone 3 out of 10, it means 30%. Those simpler ways of presenting information are much more important. Don't tell somebody liquidity ratio. Tell them about we are having a cash challenge. This literally helps people to even communicate with you. When you use big languages, people tend to run away from you. We don't realize that. That's just one challenge. We also need to factor in if you want people to bring you into the strategic areas of the business. And again, work closely with the relevant partner. It could be the CEO, it could be the head of business development, it could be the head of a corporate department, whoever is your partner. That's why it's called partnership. If I may use that example, if I was working with your spouse at home, imagine how it is if you can't work closely with your spouse at home. That house will not be enjoyable. And the same thing for business. If you want them to bring you to the strategic areas, you have to coordinate things with them and be aligned. I will stop here for now, Mr. Soa.
Thanks, Mr. Sawaneh. I think it's important, like you said, we have to be relevant as finance. So we need to have the requisite skills. And we don't wait for it, we go for those skills. Thank you very much. And we would still bring Mr. Jobe here because I think that's important to see different perspectives. How do we slowly, as accountants and people that are always with numbers, how do we slowly move on to strategic finance? What step-by-step guide you may want to share with us, Mr. Jobe? Thank you.
All right, thank you, Mr. Swar. This is very interesting. And I think accountants generally are naive. In most cases, we just want to keep ourselves within our numbers or within the decks, within our laptops. Anyway, that has to change. Given the fact that we are involved in businesses, one of the key issues, well, I'll have to still emphasize on that, is to understand the business. Before you can move out from the traditional accounting bit, you must understand the business, as Mrs. Fatoumatta has indicated. And that is to understand what the other departments are doing, understand what is the corporate mandate. Like if you take an example of the GNPC, where we are, it's an oil and gas industry. We all came in here without any background of oil and gas, but what we had to do was to go ahead and make sure that we get all what it needs to be able to guide the institution. And in doing that, that's where relevance comes in. And for you to be relevant, you need to be very reliable and credible. Credible in the sense that whatever data you give, whatever advice you give could be tested and found to be in order, could stand the test of time. And reliability, that is to be able to give it to them or to meet their needs anytime they request for it. It is also important under this circumstance as finance professionals to make ourselves relevant. Sometimes, okay, people will say, okay, it has to be indicated somewhere that I have to attend this meeting and that meeting. That's one thing. But the most important thing is when you prove over time that you are the right person or your team has something to offer, when meetings happen, they'll always have to wait for you. I have seen scenarios whereby CEOs would say, okay, when we get to five miles ahead, you bring us back because things were not done right. And with that, if you can do that to CEOs as a start, particularly as a beginner, trying to move from the basic accounting to the finances, they will see your relevance because you are correcting them down the line, which is very, very important. And on that basis, definitely, accountants must move away from the numbers. And the best way to move away from the number, the key element is to understand the business. When you understand the business, understand what the other business partners are doing, and you guide them accordingly, and they've seen that that is working, they will always refer back. In scenarios, you'll see even the HR people will come to finance for finance to guide them. That's not our area, but finance people are expected to be able to be an all-rounder, very effective, to understand the business in total. So our major problem is we always depend on okay, I'm taking as a finance guy, I'm the director of finance. Okay, I can just do the normal traditional finance, prepare my report, and that's it. We should guide the business. And to guide the business, we must understand the business. And to understand the business, that makes you to be somebody unavoidable. And therefore you can guide everyone and get to the next level. I think that is one of the key elements that we lack. People are only on the numbers. And the sad part is CEOs and executives are taking finance as just double entry people. Why? Because they believe, it's debit and credit. But we've gone beyond that. If you look at the ACCA program per se, you will realize that what we do in ACCA is so rich and so advanced to the point that there is nothing that you cannot do. So I think that is one important thing that we have to look at. And for the young people to move away from it is we need to learn. As Sawaneh has already indicated, we need to learn, we must make the research, we must build up the experience as well. And the advice would be not to be jumping from one job to other within a month or within a year. At least wait for it, cut your teeth, understand the business. Whatever you understand, serve as an experience, and that experience will help you wherever you are. So basically, these are things that we need, and using our analytical skills, that should definitely take us to the next level. Let's move into analytical. The reports we prepare, those are basic necessities, but we analyze and report on them, understand the figures, understand the business, and therefore we'll be very relevant, very reliable, and credible, and everybody will need us. Thank you.
Wow, thank you so much, Mr. Jobe. I think that was spot on, and we really appreciate that. I think 3 points. You indicated that as accountants, we have to be credible. I think that's very important. We need to make sure we do our homework. We have to be relevant, and that's critical as well. We also need to be reliable, like Mr. Jobe said. These things have to be there. We do not have to let people push us to the back seat and be there. We really need to ensure that we grow and we are relevant as well. Thank you so much for those. I will call it very, very valuable points, Mr. Jobe and Sawaneh and Fatoumatta. Then moving on to the next point, I want to engage Sawaneh on this. You see, we all agree, and like you have just said, business partnering involves coordination and participation with other departments. So how can accountants involve other functions in budgeting to ensure active participation?
Thank you, Suwa. I think that is coming at the right time because many companies by now will be working on their 2021 budgets. And in the past, I've seen situations where most companies, which is led by accountants, to develop a budget and hand it over to the businesses. Budget is very important depending on what perspective you look at it. Budget can be used as a coordination tool where the business from different functions will sit together, put their views of where the economy will be or the market is going to be and what portion you think you can get from there. Budget can be seen as a motivational tool in the sense that you set targets for people. At the end of the day, when they achieve it, you reward them either in a form of promotion or pay increase, whatever you look at it. But when budget is used as a partnering tool, for me as an accountant, it becomes very important. We need to have a chat or a discussion with the business functions, or let's say other functions, before you develop a budget. Get their views. Strategically, you can talk to the head of sales to understand where he or she thinks the business is going to be in another 1 year or 3 years if you do a 3-year rolling plan. You can talk to the economics if you have one, or business development person to give you their views. In other words, what I'm trying to say here is that get their views on board before you cut a target. Because when you get their views on board, it minimizes frictions. Everybody is on board. Even if you have your own data, It's important you ask for their views, then you can challenge their assumptions. You can challenge their assumptions. And again, this is what Ali was talking about, analytics. If you have a data that sort of giving you some correlations or some analytics between your business and the market as a whole, if the head of your marketing or sales comes and gives a different number from his or her assumptions, you are able to defend without emotions. Let's have constant meetings with them. You do not wait until it's time to do budget in December to engage them. You can start having a meeting somewhere in August. For me, the best time to start a budget actually is July. After you finish your half year end, you start discussing with the other executives or other business partners how you prepare, you plan to do your budget. Let them have input even on your budget timelines. In that way, it won't be seen like I am the one who prepared the budget. I will set the time and just give it to them. They must meet that timeline. That's not what partnership is. If you are planning for a holiday with your spouses, you won't wake up and say, we are going to go for holiday by 15th of January to Dakar or to maybe Serakunda or so. You have to have a plan in place where you engage, you discuss which place are you going to see, what kind of activities you want to do there in a very good, smooth running family. In a business partner function too, you have to have the same mindset. Look at it that you are partners. You are not above them. You are not important than them. The best way to use a power actually is to give the power to somebody else. When you give your power to someone else, they return to you in a different way because they respect you, they value you, and in that way they follow whatever you want them to achieve. It's a strategy of managing people, influencing others. At the end of the day, what we have to understand, we have one goal, that is to achieve the objectives of the business, which include all the stakeholders that are in that business operations or functions. You cannot do without one or the other. Everyone is important. So the coordination, inclusion is very important, Musa, if you want to get everybody to be on the same page in terms of developing a budget. Thank you very much.
Thank you, Ebrima. I think that's very valid. So it's no longer accountants cutting budgets for businesses. It's no longer us giving them, a blank, incremental budget where we will just look at where we are landing or where we are ending the year with and probably put on some percentage. This is important. Like Sawaneh said, we have to be involved. We have to go back to the businesses, get their thinking, and ensure that whatever we are also preparing. So like Sawaneh said, we sit in the business, right, as the business partners. So effectively, when we are developing budgets for them, we have to come up with credible budgets that anyone can test and, would be able to pass any level of test. Today, for example, we know 2021 is still going to be an year of recovery because of the pandemic that we are going through. So we need to ensure that we are part of the business, understand the key drivers of our businesses, understand the data and what is happening in those areas, what are the plans, how recovery is going to be, after the pandemic, so that we are able to bring budgets that are relevant to our business. And this is a key strategic tool, and it really guides the business on where to invest and what to do. So we really need to get it right. Thank you, Sawaneh. I think I will then go back to Fatoumatta. So you see CEOs really want a bigger picture and a thinking and a strategic thinking CFO. In your opinion, I mean, to bring it down to literal terms, what does bigger picture here mean to you? And why is it important to CEOs and so many business leaders?
Well, that's a good question. One thing that management accountants need to understand is that accounting is not only numbers, it's a mixture of financial analysis and business strategy. So it combines both the quantitative data and the qualitative. Now, quantitative, we all know how to do. That's what we were taught to do. So I'll leave you with that. In fact, computers even know how to do better than us. It's the qualitative aspect that helps pretty much to help influence decision-making, and sort of drive long-term business success. So the bigger picture is all about clarity. Where you're heading at. Your actions are aligned with the business goals, with every departmental goals. Like someone mentioned, I think it was Sawaneh, that mentioned as well, that obviously getting engaged with the other departments is very crucial, because then you understand their business, you understand their goals, you do understand their challenges, and then you're able to provide a solution. You're able to align all your actions to their business goals. With the bigger picture clearly in your mind, every decision you make and every action you take can be considered in the light of, how do I support this business? How do I grow your business? So the bigger picture thinking creates more of a context and enabling people to honor the values that we seek by working together. The more connected you are, the more integrated you are with these businesses and these individuals, the less likely you're able to subscribe to oh, this is us, this is me, this is them, this is that factor of, this is what we want and this is what you want. It then becomes an us thing. It becomes a unified thing. So for CEOs and CFOs, it's all about getting to understand one another. It's all about, knowing every business goal and seeing how you could help each of those businesses to grow financially as well, by understanding their business risks and also understanding their business goals. At the end of the day, it's all about being human. Just be human, be a person, be a friend, and understand what they really want. Help them out.
Thank you. I think that's vital. I hope we are really listening to Sawaneh. You want to say something?
No, I was going to add a point to which Fatima just spoke about on the bigger picture, because she touches something very important. And if I may add on that, is having a bigger view. Again, I spoke about the fact that because we have the money, which is the most important assets in many organizations' financial books, we have other assets like human beings, but as far as the financial books are concerned, is the money. If you don't have cash, you can't do the business. So it has given us some natural source of power. Because we are controllers, we have to look at a much more bigger than what we are looking at today. Instead of making a decision based on what you see as a short-term result, you can look at a much bigger view. An example you gave here, at the end of the day, we are human. Today, maybe you want to do an advertisement for your company. You may say, you know what? We should not do advertisement because things are tough. This is coronavirus. But this may be the time also where you could make a much bigger impact for investment in adverts, because maybe your customers are all locked down at home. You create a brand in their mind. Even after lockdown, you could make a much bigger sales. It may be you want to do a donation. At this time, things look tough. But this may be a time people see it as you are truly a business partner to not only the business you are in, but your customers. Your customers may come and say, I cannot pay. Of course, you have to balance it with other important needs of the organizations. But the bigger picture thing is, don't look at what you are seeing alone. Look at beyond the horizon. It's as a human being. If you are making certain decisions, if, for instance, I'm posting a video on social media, I should not look at is the enjoyment I'm having today, is not only the happiness I am having today. But 10 years later, if I put this video on social media again and look at it, will I be happy about it? So in a similar way, if you are making a decision, don't just focus on what is happening today. Look at what impact it may have on the business, other areas of the business. For instance, it could be regulatory risk. For instance, it could be creating a very happy customer. If I give an example of, I think that was UPS, I can't remember, but it's a US company, where a customer came because they promised the customer that we would deliver within 24 hours. This customer came, he gave them a parcel for them to deliver into another state. But they did not send a parcel at the right time. And their courier has left. Somebody took his money A customer who has paid, let's say, about $300, this person took his money, spent about $3,000, took a flight just to go and deliver a parcel which the customer has paid for $300. At that point in time, when he was asked, why did you do that? His conclusion was because this is what we promise our customers. That gave them more strong branding and advice because they respect what they've agreed with the customer because he was thinking of a more bigger picture at that point in time. So I thought I should add that to Fatima's comment.
Well done and well put. I think it is very important and it's critical that we carry that bigger picture mentality. So today, the pandemic, and when we started, I think we had a couple of discussions around this, and some institutions to say, you know what, as far as we are concerned today, one of the most important thing is cash, right? Like Sawaneh said, cash is the most important. It is king, and for you to be able to survive the pandemic and all challenges in our business environments today, you need to have cash, right? So how do we mobilize cash to ensure that we bring cash into the system? So this is what we need to be doing as accountants, as CFOs, as finance. How do we and then bring solutions to them? Do we give discounts or do we give favorable payment terms? You know, do we ensure? How do we ensure this is done? And for example, what banks also did was to restructure some of the facilities that they've given to customers. You know, the idea is to ensure that the customers survive. When customers survive, the businesses survive, right? When the customers are out, and the respective institutions wouldn't survive either. So how do we play that role? What is the impact? You know, is it going to have any default? Are we going to have any cash flow as a result of those structures? What can we advise? How can we think outside the box to ensure that we are relevant in around those discussions? I think it's very important. Thanks so much, Fatima. Thank you, Sawaneh, for those valuable points. I think we then have to go a bit fast to ensure we are able to wrap up in the next 10 minutes. We started off a bit late. However, Alieu, Mr. Jobe started something. He mentioned something very important. Managing risk of the enterprise, of the institutions to we work for. CFOs and finance professionals, finance staff in general, have responsibilities to drive profit, but also to manage risk. So how do you balance the two, considering they can be conflicted in most of the cases? Mr. Jobe.
Thank you, Mr. Swa. I believe the previous question was very, very interesting anyway. We is about thinking about the bigger picture. I just want to make a few comments on it before moving on to this one. The bigger picture to me, yes, would involve, from our perspective, issues of how do we get into vertical integration. From experience and like what we do within our own quarters, you realize that new business opportunities, we study the market, study our competitors as finance people, and advise management as to the level that we need to move on if you want to be very prominent. Like right now, one of the basic examples that I will give is like, we know you have, the petrol stations in this country, per se, with jar oil, maybe you are not in the Gambia, but you learn that they are almost everywhere in this country, you know, opening petrol stations in every corner of the country. And one of the things we, the finance people, the advice that we gave to management was for us to move to the next tier, to the next level, at least to ensure that even with all their petrol stations, as a corporation, we'll be able to still keep them within our circles and be supplying them on one way or the other, servicing their petrol stations. You know, these are part of the bigger pictures, which is definitely outside the finance bit. So I think I wanted to contribute that and to indicate that the finance people should not only depend on the normal business, whatever, horizontal, whatever, but to think outside and think of what can be done to keep our competitors under our watch. That is one thing.
Thanks. Valuable contribution.
So coming to the issue of
thanks, Mr. Jobe.
The issue of managing the profitability and the risk. Here we have to be very sensitive, and sensitivity is one of the key things. and to be sensitive with our cost, which is very, very relevant in terms of new projects coming up, which is very important, and improving efficiency. It is difficult because you are always told the bigger the risk, the bigger the profit. But sometimes how do you manage the risk is to look at some of the elements of the risk, which could be the cost. How do you manage that? Trying to make sure that you minimize your cost as far as you are entering into any new venture or trying to approve any particular activity. And so that there is efficiency. Some of the leakages and holes and whatever has to be things that has to be addressed and fixed. That is going to improve our efficiency. And these are also very, very relevant. And we must also build the stakeholder confidence. How confident are our stakeholders? The reputation of the corporation are things that are very, very important. And I believe the finance people cannot be left behind. So the sensitivity element here is the catchphrase. We need to be very sensitive as far as the other elements are concerned in terms of the cost, because as far as risk is concerned, it is more of cost exposure than revenue. Okay.
Thank you, Mr. Jobe. This is important. We need to have an optimal level. I mean, the risk tolerance level for any business should be defined, and I think defining that we have to put in our input as CFOs and guide decision making. But I think it's very important. I think I would want to give the other panelists an opportunity to have a comment or two. How do we optimally balance the risk and return as far as our finance function is concerned?
This is Fatoumatta. I love what Alieu said. Being human and being sensitive is very crucial. But to add on that as well, I'm gonna say have a very strong internal control. Using controls lets you spot problems before they're out of hand, and you can help prevent individuals from stealing from you, departments here and there. And have it written, write your goals, write your controls, make sure that everybody agrees to those controls. When you write these controls and everybody agrees to them, it helps your staff understand what they can and what they cannot do when performing certain duties. That also helps protect your company as a whole. And one of the key benefits of internal control is reducing fraud, opportunities here and there. So a strong internal control can help a company keep healthy, and it helps achieve at least 4 main business objectives, which is number 1, safeguarding your assets, ensuring a reliable financial reporting, maintaining compliance, and making sure that your operation is going effectively and efficient.
So controls. When you have the right controls, the risk would be contained at some point. We would never be able to at least clear all the risk, but at least it will be at an acceptable level. Thank you, Fatoumatta. Sawaneh, you have a point.
Yeah, thank you very much. I think Fatima and Mr. Jobe have talked about the key points that are important when it comes to balancing risk and profitability. Risk is something we cannot go without. If you don't want to take risk, then don't go into business. In fact, don't exist, because there is risks everywhere. Working on the road, something can happen to you. Investing money in government, we have seen governments have defaulted on their borrowing, so no place is safe. It's about having that governance framework that's going to guide your institution. So if you're an accountant or a CFO, it's important you have a risk management framework. And Alieu rightly spoke about enterprise risk management, because every part of the business is related. If, for instance, you downplay on safety in your institution, you do not want to invest in safety matters. Let me give an example of where Alieu is working, GNPCs, at least it belongs to all of us, I can talk about them. Let's say they didn't invest in safety for oil and there is fire in one petroleum station. People died. Do you know how much it's going to cost them? How much it's going to embarrass the management of that company, the board of the company, and government who have made some investment in it? So you need to have a risk management framework that looks at all your key activities and look at the potential risks. What controls do you have in place to minimize or mitigate those risks? And you constantly monitor them, report them to a more senior level in the organization. In this case, I'm talking about the board, the CEO, and the CFO. These are important because with that risk, it guides you. For instance, if price rates are going down, if interest rates are going down in dollars, you decide to borrow money in dollars because there is cheap dollar rates somewhere you have access to. Forgetting that if you convert that dollar to dollar C, if exchange rate in dollar C increase from 50 to 70, you are going to be paying from by extra $20 for every $1 you borrow. This is a risk some people don't see. So you need to have that kind of framework, and there it guides all your actions, your decision makings. You will be able to minimize as much as possible or balance risks and profitability. Thank you.
Thank you, Sawaneh. I think it's very important what you mentioned. We have to, the frameworks have to be clear, and the financial impact have to be rightly stated. I think this is where we become relevant. This is where we can have our right input. Like you just said, if as finance and as CFOs, we are able to, bring certain scenarios and the financial impact it will cost the finance, it will cost the business. This is where right decisions can be taken, because it's always a trade-off. There has to be an amount of risk to take, but we also need to ensure that we provide a level of details to the leadership to ensure that the right balance, and also whatever risks that is there, we should also be able to define the mitigation actions, because of steps to take to ensure that those risks would not crystallize. Thank you, Sawaneh. I think we would then go into probably our second to last point here, I think, which is very much important. See, there is bound to be issues when we are business partners. We are finance professionals, but we sit in a business to support that business. So we are part of that business, but of course we are also at some point watching the business. So here, the stakeholder management, especially senior stakeholders, because there we are the, provide guidance to the management, the leaders of that specific business unit. How do we manage and persuade stakeholders and people with little understanding? And some people really have even understanding, but at some point, they are very much persuasive. They have strong personalities. How do we, as finance professionals, are able to persuade? How do we manage dialogue? How do we get them to take the right decisions or accept our recommendations? I think I will start with Mr. Jobe here.
Okay, Mr. Swa, that's a very interesting area. And definitely, I don't think there will be any hard and fast rule as to how you do it. But I would want to say this, it is dependent on the issue in hand. Because most differences in views could be as a result of personal issues. It could be as a result of departmental, attachment. It could be as a result of a lot of other factors. So what is driving the difference in view would always determine what would happen. But I think some of the key things that we need to do is to, one, listen to the views of the others. When you listen to their views, you understand their views, appreciate it, and respect their views. And in the process, maybe after exhausting their own part of the story, it could be a bit easier to convince them. You wouldn't just want to be having talk of war, pushing and say, no, it's this or whatever. You just need to be calm, listen to the other parties, understand what is their position, and out of it, you need to be very confident of yourself as well. Because without the confidence, you cannot listen to them. Need to be very confident. listen to their views, and therefore take it to the next level. Sometimes with that, you will be able to resolve the problem. In other cases, you might not be, but then you just have to withdraw. Allow some time, give some space, and then finally engage the people concerned, because you will realize these are people who are very, very, very strong. It could be the CEO, it could be the chairman, but in any case, if you listen to their views until they exhaust all the issues that they have to share, and you try to convince them it doesn't work, you need to really use your numbers. And the beauty is, as finance people, we do not talk out of the blues. All our decisions, our conversations should be guided by our figures. And as I've said, the figures are credible and you can always test it. So with the figures, after getting their part of the story, you should be able to convince them to move to the next level. I think that is one way of doing it. In certain occasions, I could remember we have issues of that nature. We have situations whereby we have different views in what we do. And sometimes you could even be threatened with like, it will cost you your job. But there you need to be confident and you have trust. Have trust and confidence in yourself. Stand your position. And therefore with time, you know, the truth will prevail and you get to the next level. We have such experience in the past and they were very, very tough. But finally we were able to handle it, to be as a team. In the issue of having these differences, also you need to stay as a team. Because as a finance team, if you have different views, it becomes difficult to convince the others. But if you stand as, if you keep yourself, if you close your ranks rather, move to the next level, then you can easily convince them. Because what tends to happen normally, you realize that CFOs can go out and say, okay, this is not possible. You realize that the CEO or somebody above there would just go around and start talking to a genius and say, okay, this is the situation, to see what is going to be their position. And that's where you have to keep what we call that esprit de corps with your team, and you consult with your team, and whatever position you have is with your team. With that, nobody can crack it, and therefore they wouldn't have any other option but to come up and accept your new view. But you don't use force. You have to be very diplomatic, and you have to be very patient. Basically, that's it.
Thank you. So in other words, Mr. Jobe, we have to be good listeners, right? We should not be dismissive of any points, as irrelevant as it may sound, as probably, you know, as wrong as it may look, but we need to listen. We should not be dismissive, and we should ensure that we are authoritative. I think I listened to I saw a while ago, and someone was saying, you know what, finance is no art. It doesn't tell stories. The numbers are what they are. So we have to do our homework. The numbers will speak for us. Thank you so much. And then we will go to Fatoumatta with the same point. How do we manage stakeholders? And most of the time we are so young, and they are in terms of age difference. This could be extremely senior people or older people. And how do we manage that, Fatoumatta?
Usually it's hard to talk after an expert has already spoken. So you're doing me a disservice by making Alieu talk first, because he's mentioned pretty much the important points, right? Every department has different goals. So it's inherent that everybody would have different ideas, different ways of getting to achieve their goals, regardless of if it conflicts with somebody else's. They don't really care. So a manager's job is to create an environment where people feel safe to contribute their experiences and their ideas, and then see how to put all of that together to achieve one company goal. So ideas of how to do it, apart from what Alieu has already mentioned, is number one, set an example. A certain degree of conflict is normal, it's unavoidable. It doesn't have to be uncivilized. You can set the right tone, set the right tenor for how your team members can relate to one another, how you would relate to other departments as well. Don't have that discussion, don't plan it. So allow people to express themselves, like Alieu said, listen to them to the end. Then when you truly understand their point of view, you'll be able to use those points to be able to put in your point of view for them them to agree. Establish rules of the engagement. Make sure that there's a positive, productive, relationship-enhancing conversation that will allow people to feel safe to discuss certain things, promoting self-reflection, emphasizing respect, and understanding one another, seeking to understand instead of being just dictating your simulation results. Just learn, seek to learn. And if you're a manager and someone mentions an inappropriate comment, call it out. Our organization values diversity and inclusion, for instance. We promote development of people in arguments in line of those values. Yes, we allow differences, we allow conflict, but we don't allow inappropriateness, right? So call it out, don't be afraid to do that. It just adds more respect to you. And before those management meetings, have one-on-one discussions. Go for a cup of coffee, go stand at the aisle, go stand on somebody's desk, have those conversations. When you know somebody as a person, not as a colleague, then you truly understand their point of view. Then whatever they say doesn't come in as a conflict, it comes in as a conversation, if that makes sense. Know their family, know their daughter's name, their son's name, that sort of thing. And just foster that open-mindedness in your team. Hold yourself to the same standard. Obviously, it's easy to advise people to do things, but it's hard to practice it ourselves, right? And worst case scenario, seek outside help. If you feel you can't handle it and there's so much conflict, there's so much back and forth, get someone from outside who is independent to help out.
I think that sums up. I think we've done justice to that point. Thank you, Fatoumatta. We are running out of time. I would pose the final question to Sawaneh. And here, I mean, there are some level of expectation that we have, from our CEOs to ensure that we are able to be an effective strategic business partner. What do you think, in your opinion, maybe some of the support, and what can CEOs do to help us in this role? What kind of conversation can we have with them to ensure that we are able to drive them, we are able to convince them to give us the needed support to be able to deliver? Ebrima.
Thank you very much, Musa. And the question is very much related to the last one you just asked about dialogue. If we are now talking about the CEO who happens to be our senior and also the head of that company, it is important we have a dialogue with them, understand what they expect from you. As a CFO or an accountant, anybody that you are trying to manage, you want their support, you need to understand what they want from you. Don't produce a report what you think they want. And it's a problem in many environments, not only in finance. We give people things we are thinking they want. We want to think like them or think for them. There is nothing wrong to ask a question. Yes, of course, you produce a profit and loss account, you produce balance sheet, cash flow. That's you are trained to do. But go to CEO and ask him, what is your direction for this company? And from there, you can now develop your own finance strategy, whether it's operational strategy or a long-term strategy. How would you support that strategy or vision of the CEO? If the CEO said, I want to grow, I want to multiply this business, I want to buy more business in another 3 or 4 years' time, you start thinking about how do I get funding for this business? And so that before he goes further into that vision, you are able to advise what are some of those challenges. I remember Fatima spoke about trusted advisor. So we are like, CEO said, I want this. I said, okay, I will follow you. But you come back and give him what are the things we need to put in place. Over time, he will realize whether we have those things in place or not. So that dialogue, understanding their visions, then you develop your own strategy is very key. Because if you tell me, Musa, I want to go to the moon, and I know that's your vision, I now see how can I support Musa to go to the moon? By first, I need to have maybe some funding in place. I need to have some preparations, get some approval from relevant government. I have to book for whatever flight I have, when I'm going to Galaxy. I have to book all those things. How much money do I need to put in that in place? How much training do I have to give to Musa to go to the moon? Then if I now come to Musa and tell him, I need to get 2 more people in finance, one of them is going to focus on your training, one of them is going to focus on raising the money, and all these people, our long-term view is to see how we take you to the moon. Don't tell him I want more staff. That's not how you negotiate things with the CEO. Tell him the work you want to do, and at the end, you can talk about, I need A, B, and C, or skill A, B, and C. Therefore, I need to train my people on the following areas. In that case, you have sold a vision, you have sold a picture, which has already got his or her attention. He is able to support your own request. This is very important when they are trying to get something from our seniors or the CEOs in particular, who may be more experienced or understand a large part of the business than what we are looking at.
Thank you, Ebrima. I think that's you've also done justice to that. It's very important. Let us not be always demanding, requesting for resources. Let us make a case, a persuasive case, to ensure that we have the right support. And to be honest, not only the CEOs, the finance department is seen as the last place of hope in this institution. You know, everything that other departments or other units would not do, it ends up with finance. So we have to ensure that we get the right expertise, we have the right skills to be able to negotiate for resources as well, to be able to meet the expectation, not to be able to fail our CEOs and our respective colleagues in the business. Thank you very much. I think that would be that was the final one. Now we would move to the Q&A session. I think Salif will have a couple of questions. We would try to run through them quickly. Then we'll come back to you for your final comments before we go. So the first one here, we do not see a lot of CFOs taking up CEO roles. Can CFOs be good CEOs? And if yes, why? I'll start with Fatoumatta. Do you think CFOs can be good CEOs? And because the panelists have an observation that not most CFOs would move on to become CEOs. And I think this is a very important thing here. I want all of you to put in your point. Sawaneh, you can take that on. Fatoumatta is having technical issues. She will try to join again.
Okay, Musa, thank you very much. I think it's a very relevant question for many people. Of course, not everybody wants to be a CEO, but yes, CFOs stand a chance to become a CEO. But you have to be a strategic CFO. It's not any type of CFO. And when we say the strategic CFO, who thinks like a business partner? In most organizations, it is only the CFO and the CEO who have access to the board. So you have opportunities to prove yourself, to know that you can deliver when you are given the opportunity. In many organizations as well, CFOs deals with regulators. So even if your company is regulated, you have opportunities to prove to regulators that you know what you are doing. What I'm trying to say, because where you sit as a CFO, you see so many things about the business. Maybe somebody from human resources will look at bringing people in, talent management issues, difficulties. Somebody from sales is seeing the sales numbers are coming, but does not have much about what happens to the talent, what happens to the supplier side on the procurement. You see all these things, but you have to also think and prepare yourself to be that CEO. In that way, you have to move out of being an accountant. There's a difference between an accountant and a CFO. If you notice today, there are so many people who are becoming CFOs in Fortune 500 companies who are not necessarily an accountant, because the CFO must have that strategic view. They must have to learn stakeholder management. You are dealing with the regulators, you are dealing with the board members, you have to learn how to manage those stakeholders. You have to create that visibility. And this will take me to the young people who probably are on this call, that visibility is very key. And that's why many accountants could not be CEOs, because they sit at the back, prepare the report and send it. If you even ask them, go and present, the CEO is not in today, they will look for one reason why they should not be able to present. They sit at the back and believe that my career is in the hands of the CEO or my career is in the hands of another different person. No, you are 100% responsible for your career. If you want to be a CEO, as a CFO, as an accountant, you must start working on it from the very beginning. You have to start thinking like a CEO. The kind of decisions you take is important. The kind of networks you build, the kind of connections you have, the kind of things you study. Many people after SCCA, they pack their books. They don't read anything about leadership. Today, leadership styles we learned in 2009 and what we've learned today are different. This is social media time. I was reading from an article where employee engagement is becoming a bigger issue because we have social media around, but people are still employing young people. So you have to know how do you engage young people at this time. So it's important you develop yourself. Presentation skills are important out of that. How you communicate with people, the networks you have. It's very important. Now we encourage anyone, whether you want to be a CEO or not, prepare yourself to be a leader because we can always see the leadership deficiency around us every day, whether it's in government or private sector. Thank you very much.
Thank you so much. Apologies for the technical issue. Many CEOs actually start from being CFOs. As a matter of fact, most CEOs had some financial background, came from a broader role from maybe COO or something to do with that nature. But for a CEO, you need to be extroverts. You need to put bright perspectives into things. You need to be willing to assume accountability and responsibility for people's faults. And then a CFO is more or less a balanced and reflective kind of person. So there's no shortcut into leaping from a CFO level to a CEO. The first thing you need to do is get involved. Like Sawaneh said, be the best experience to become a CEO, even if you don't want to be a CEO, is to gain experience in running something, right? CFOs who make the transition to CEOs have managed to develop a strong strength in running a business to complement what they already have in terms of their financial skill set. You have to learn to effectively deal with customers and inspire others. To survive, you need to learn new skills. As a career progression, getting those operational experiences, getting to other departments and learning what they do, and overshadowing a CEO and working closely with them is very crucial. You can have a deep-seated operating effect on your chair when you partner with the CEO. And this means the CEO is mentoring you. Obviously, building a strong relationship with the board members. Get to know who your board members are. Get to those meetings, even if you're not a panelist, and just chat with them, right? So there are more CFOs who have strong relationships with their board members. And those are like gatekeepers for CEOs whenever they're not around. So yeah, there's no shortcut. Just be there, be present, let them see you. Just don't hide behind the computers, really. Be there and go into these events, have a drink with them, go golfing with them if you go golfing, go dancing with them, go to their naming ceremonies, let them see you. It's only when someone sees you that they can truly help you move to the next level.
Thank you. Thank you. Very relevant. Very, very relevant, Fatoumatta, as always. To start business partnering in finance department, what are the most get things by a CFO as a head of finance?
Right, Mr. Swa. In the perspective of finance, the first thing that we need to do is to have a robust system. Our processes must be in order. Getting the right processes is very important because before the business partnering, it has to be that you must build the foundation. And the foundation here is to make sure that you have your systems and processes right, which means your accounting system must be right, so that you can produce all the reports that you want. Otherwise, if you get to the other business unit, start talking about something, they will say, oh, there's something that we need from you. We couldn't get it from you. So you must make sure that your basic mandate, you have fulfilled all. To fulfill those basic mandates, you need to have your information system in order, all your processes must be in order, and you must also create that inter-business unit relationship, build it up to build the confidence with them. That is very, very key. And after that, from there, you can move to the next level. You start a business partner. In any case, your process must be right. Your system should be in place. And you should also be involved in transformation, in the transformation of all the other systems in the business, because whatever happens in other units affects us. And you wouldn't just say, okay, I'm just automating my side, but anything that affects you from the other end also, you should be involved to guide them so that they can also automate, and we move, and then we can graduate to the next level, which is about sitting together and discussing about business partnering.
Thank you, Mr. Jobe. I think that's very important. So just to add to that, if you decide that you really need to, set up this business partnering, as Mr. Jobe said, there has to be systems. We have to indicate what the business unit needs to be able to support them. So as head of finance, you probably want to dedicate a team member. Let it start first. You can attach that team member to that business. Send the person to the business for some time to study, to understand what the business does. When it comes back, then you could set some objectives, the business and their requirements. And from there, get into the systems where what is not available in the system, make sure that you work with relevant departments to ensure those are in the system, there's information, and you're able to support them. I think that's very important. This is exactly how Mr. Jobe put it. And thank you again for the guidance, Mr. Jobe. That would be it. Before we go, I think I'll just go around the panelists quickly. So if so that you can tell us your final words, then Salifu can quickly wrap up. We'll start with Mr. Jobe.
This is very interesting, and I really encourage for its continuation. This is some of the things that we lack in the country. At least to have a forum where we can discuss issues, and I would want to say everybody must take it very seriously. We must all participate in it, because after all, it is all geared towards, elevating, the status of the finance people. One important thing is, traditionally, finance people in this country are very naive. They always believe in doing exactly what they are told to do. But we could be more strategic, because going back to the topic today, and the only way we can be more strategic is to make sure we involve ourselves. We must involve ourselves. We should not hold back. And to involve ourselves, we need to understand everything that is around us and go beyond it. We must have that interest. Accountants must be curious. Curiosity is one key thing that we have to do. And when we are curious, it makes us to start, entering and learning everything. And all what we are learning would help us. The important thing is, with our positioning, one key vantage position we have against the others is, everything that is done would come down to our decks. Everything that is done finally rests with the finance people. This gives us an opportunity to understand what the other sectors are doing. If you look at the various business units in a corporate institution, some don't even know what the others are doing. But here, by virtue of our role, we see everything and we know everything. And with that should force us to make more research and take us to the next level. I would definitely encourage that we continue this thing, which is very important. I do follow it, and I will continue following it. And definitely, I think there cannot be any better model of doing it, and no better idea than this, because here at least the young ones can learn from it. For us, we can also refresh from it. It's about a give and take, and I think that is very, very important. And I wish that it get to the next level. And I thank everyone. Swa and Sawaneh. It's all the same. Sawaneh and Swa seems to be the same. So Swa and Sawaneh, Salif and all the other members, I thank you all, and I encourage you to keep it up. Thank you.
Thanks very much, Mr. Jobe. I think thanks for the guidance. I think this is wisdom. We have to be more curious and to ensure that we improve on ourselves to move on to the next level. Thank you, Mr. Jobe. I will now ask Fatoumatta to give her final remarks. Fatoumatta.
Thank you once again For strategic financial partnership, number one, be a good role model, embrace inclusiveness, demonstrate respect for divergent views, and be willing to challenge your assumptions. Encourage team members to seek understanding from each other's experiences and values. Tread carefully with direct reports who have different views and other team members who have different views from you. You don't want them to feel that they are going to be negatively evaluated just because of their difference in opinion. And also don't shy away from calling out inappropriate remarks. You can respectfully call out inappropriate comments. Otherwise, you have given people permission to speak insensitively. So make sure you're able to balance the two.
Thank you. Well put. We need to be able make sure we balance. You know, we have to have respect, but now let's call out if it's not right in a respectful manner to ensure that our voices are heard and guide our colleagues in the business. Thank you so much, Fatoumatta. Finally, Mr. Sawaneh, your final word to the panelists. The participants, sorry.
Thank you very much, Musa. I would like to thank both Fatima and Mr. Jobe as a member of IGBF as well. For today's event, I'm grateful for the opportunity. And my final words will be for anyone who is interested, not only in business partnering, but to be a modern and effective finance professional or accountant. It's important you learn, and your learning should be purpose-driven. In other words, you have to learn something that's very relevant to the industry you are looking at or the industry you want to move into. Know about your industry, what are the things that impact what move in your industry. Know things like data analysis is very important, and it helps you keep record of the initiatives you are doing. Involve other stakeholders is important. Business partnership is partnership. There is nothing like one person being into partnership. So you need to get involved with the other stakeholders. Maybe they don't even have the knowledge to appreciate what you are doing. So you may have to impact them first before they can understand what you truly want to achieve in the organizations. And yourself, for young accountants, please always create that visibility for yourself. In organizations, everybody will know you over time that you are that good accountant. But what takes you up for you to grow beyond where you are is having a brand that comes through your visibility. Because when you create a brand, whether it's in that organization or outside the organization, you see benefits coming to you you probably have never imagined. And it is the feature of career development for anyone to create your own brand as a standalone, which sometimes require you to have skills which are not common among accountants. Thank you very much, Mr. Suwa, too.
Thank you, Mr. Sawaneh. Not to waste time, but I think I have 2 points to comments to add here. So first, this business partnering is important and it has to be done strategically. But we have to understand first, we are accountants. I mean, as an accountant, you have to be credible. You have to understand your role first as an accountant. Be a master in that first. You have to be control-minded first. You have to ensure your reconciliations are right. You have to ensure that your reports are okay, are correct. You have to ensure that your numbers are credible, they can stand test at any level. Then become a strategic partner to the business. So you don't want to jump and become, a strategic partner and then leave the basic rules. You may not be the one doing it, but as a leader, as a head of finance, you have to make sure there are systems, these things are in place to ensure that we are able to play our role technically and then strategically as well. I think that would be and there's no shortcut. Like everyone said, the panelists, they've indicated it right. There is no shortcut. We, as qualified accountants, it should not stop there. We have to engage ourselves in research. and acquire the right knowledge and skills to be relevant to everyone we interact with. Thank you very much. Back to Mr. Salifu to his final remarks to end the session for today. Thank you.
Thank you very much, Mr. Swa. It was such a wonderful and educative forum. I think it was a good idea to basically have this panelist. I must register some of the panelists, we call on them in the last dying minute, and they responded. And I can't imagine if these people were informed well before to handle this. It was definitely spot on, Fatoumatta. We definitely learned a lot, and we appreciate your coming in. Despite the short notice, definitely we really appreciate it.
Which is mine.
Yeah, thank you. And I really don't have much to say because people in the panelists or the likes of Ebrima, Sawaneh, and Mr. Jobe are not only accountants that I see, but these are role models for me. So these are people that actually make me who I am today, from Mr. Swa to Sawaneh, and now I am working under Mr. Jobe. So it is indeed, some of the thoughts are not new to me, but I never thought that he have some things that are hidden. You know, this is the first time that I'm hearing some of the words from you. So it seems that you have a lot more to give me. So I will keep you on your neck on that. So we really appreciate him. To be quite honest, he wasn't feeling well for these past days, but you can notice that from his voice. For the past 2-3 days, he's not been working, so he had to, you know, come on and help with this. And this definitely indicates how, you know, he is passionate about helping the young ones. And definitely the IG Business and Finance is happy to partner with you, and we are looking forward to having more programs with you. And definitely with the participants as well, we have people like MLK, who was one time a panelist. We have people like Vincent and others. And of course, our able CFO from Access Bank Gambia, Fatou, who have just mentioned that gender plans as well, which Mr. Swa indicated. Our target is to have ladies more than guys. And we are challenging all ladies as well to be basically, you know, responding to our calls whenever we need them. I think we will give you the task as well to help us with more female panelists. Definitely, Mr. Swa, as the host, it was spot on as well. And we will thank Pa Malik, our technical guy. The program was live aired on Facebook. And if you need the recorded version, you can share your email. It was definitely a well-spent time, and we thank everyone for joining. Thank you very much.